Joining us now is Derrell Peel, our livestock marketing specialist. And Derrell, we got our first blast of winter in Oklahoma this past week, as well as other parts of the country. How has that impacted cattle markets?
Well, I'm not sure that it had a big impact on feeder cattle markets for the most part. In a few cases, it did cause some disruption of cattle moving to auction, but probably not a big impact on prices, generally speaking. For the fed cattle markets, I think there might have been a bit more impact. There was enough disruption in movement of cattle out of the feedlot into the packing plants, caused some, a bit of concern about available supplies, and pushed fed cattle prices actually to a new record high. We saw some fed cattle traded during that period as high as $1.72 for live cattle trade.
Let's look specifically a little closer at feeder cattle. What's the situation there?
We're kind of in the middle of or maybe towards the end of the fall run. They're still reporting fairly heavy volumes of feeder cattle, particularly in the northern plains. And there it appears that the markets might be a little bit, topping out just a bit. They're trading a bit uneven, sort of up and down depending on specific circumstances. In the southern plains, we've continued to see prices strengthen pretty well. And really across the south in general, there's still quite a bit of demand for cattle to go out on winter grazing, and with the supplies that we have, these markets have remained very firm through this period.
And then are we seeing similar situation with fed cattle? How's that looking?
Well, again, we did see a record high price partly as a result of the cold, but underneath that, we've still got fundamentally tight supplies. Again, if we do see some production impacts as a result of the cold, it'll continue to keep this market tight. And so it's really made packers scramble a bit to find cattle. They're squeezed pretty heavily right now with a box beef market that has been a little reluctant to go up, though we have seen some slow strength there, but the fed cattle prices have outpaced that. So it's kept packers on the defensive here and squeeze their margins. Feedlots are sort of keeping up with their break evens at this point, and they're about at break even, so not losing money yet, but moving ever closer to higher break evens that will be a challenge to meet as we go forward.
And then in terms of the big picture across the U.S., how are we looking there?
Well, at this point, we're still expecting beef production to be down 5.5% or maybe a little bit more than that, 5.5% for the year. That's a pretty big year-over-year change. Cattle slaughter so far this year is down over 7%. The feedlot steers and heifers are down about 5.5% in terms of slaughter levels. The cow market, of course, has continued very, very tight all year, and especially this fall, even with the sort of seasonal increase in slaughter, but it's still down 20% in the last month or so, year over year. And so when it's all said and done, we're going to continue to see tighter supplies, in 2014. And as we look ahead to 2015, we're anticipating a further tightening of supplies as these feeder cattle supplies will continue to get tighter, at least, through 2015 and into 2016.
It seems we've been talking about it a long time, but it just continues.
It does continue, and in some sense, we're really just getting started. In fact, we won't have the data until early next year to really confirm what happened in terms of herd expansion. It's pretty clear from the other indicators that we will see some level of expansion, but we don't know how much. And more importantly, we don't know what the weather holds for us next year and whether we can sustain that herd expansion. So, if we can, we're at the beginning of a fairly long process that'll play out over the next 3 to 5 years.
Okay, thank you very much. Derrell Peel, our livestock marketing specialist.